Okay, we're live and back for the next section of the course, and Hubert's going to start talking about the brick plays. And it looks like you got a question there right off the bat.
The question is, Justin, so stocks that are in the squeeze, you must look at the chart to identify if you should go long or short. Yes, that's correct, Justin, correct. Question from Scott. You mentioned that John plays the squeeze in a slightly different way. Can you explain the difference?
Sure. Yeah, it's one of the things about the squeeze is that, and Hubert, one of the things, the main thing with the squeeze is that when I was doing the pivot plays, and I used to play like just the pivots, and I know that there'd be times when the markets would just like explode to the upside or they'd fall to the downside, and that's what Hubert had kind of been working with the squeeze indicator. And I have the squeezes are a very large part of my trading day, as you'll see tomorrow. And basically what I'll be doing, my typical trading day is I'll sit there and I'll do the gap and see how that sets up. And then I'll start playing the pivots, I call it the pivots, the scalpers, and the squeezes, kind of like PSS. And I'll be looking for all of them to set up. So my ideal trade will set up where, I get into a position, say like with a pivot, and then I'll get like a 2-minute squeeze. So what I do with the squeeze is if I'm in like a 2-minute or a 5-minute squeeze, I'll use the squeeze as my entry, and then I'll start peeling off contracts at pivot levels. So say I'm in a 2-minute squeeze short, and then we fall 15 Dow points to a pivot level, I'm going to take off a piece of that. And if the squeeze is still valid, I'm still going to stay in it until the squeeze loses momentum. And what I'll do is I'll start peeling off contracts on each pivot level on the way down, or if it's a rally, I'll start peeling off contracts on the way up. What I really like, now the exception is if it's a 5-minute squeeze, because to me the 5-minute squeeze is pretty much the most powerful signal that we use. If we get a 5-minute squeeze, I will generally try to stay in the entire trade until it loses momentum. Now what I will do is if there's a lot of pivots at a certain level and a certain price range, and combined with some Fibonacci clusters, I'll generally take off a quarter or a half position off at that level. But otherwise, I want to stay in the trade as long as possible. So the exception to my rule of taking off pieces at pivots and scalper buys and scalper sells is if we're in a 5-minute squeeze. For me, the 5-minute squeeze overrules everything, and I want to stay in the trade as long as that 5-minute squeeze is valid. And what's nice with all this stuff is all this stuff works together, and also there are certain situations where it's going to overrule. And by staying in a 5-minute squeeze, that's when you can sit there and catch moves through 2, 3, and sometimes 4 pivot levels. And so that's basically how I use it. And I'll go over a little bit.
Stops.
For stops, generally what I'm doing for stops is, like, say we get a 5-minute squeeze, I'm going to get in there with a 20-point stop, and I will just give it room. If we get trying to give it a little bit room to play out there. And on days when the market range is kind of tight and choppy, I'm going to get out basically at the first pivot level if it's at least 10 points away. And then for the second half, I'm just going to hold on to it until we run out of momentum. So the main difference I think between Hubert and I styles is that I start off with a little bit more latitude, a little bit wider stop, and then I'll use the pivots as exits, and then Hubert will use specific price points as exits. And we both kind of combine them on some of the plays that we do, if that answers your question. And you'll see these tomorrow, too, when we're doing these live.
All right, question from Roger is, when Hubert does a gap play, does he use a 10-point stop, or does he use John's 1 point to 1.5 risk-reward ratio? I use 10-point stops. And the only reason I do that is I'm a shorter-term trader, and it's just, if I'm wrong, I'm gone. I can take a couple losers in a row for a good gap trade. It's kind of like the previous high, Patrick. What I'll do is I'll spend some time after we get done here today, and I'll throw some equity stuff up. I've actually got some charts of some equity swings. Last one I done was, I believe, CMBT. And I'll do that for you. But usually I use like the previous day high. And another tip I can give you, like on equity swings, as soon as you see a squeeze short or a squeeze long on equities, if you want to wait, you can wait until the third or the fourth blue dot. If you missed the first signal, to actually wait to get short. On the third or the fourth day, it'll bounce and then it'll head back down. Actually, if you can pull up a chart of, we'll do this. I can do this tomorrow in the room. I'll show you. We've just fired out of we had a daily squeeze, and then on the third day it bounced and rolled back over. So, and it's been getting thrashed ever since. So, I'll show you some live examples tomorrow in the room, and then I have a little bit more information in another presentation on equities. It's like 4 or 5 slides or something like that I'll go over. But usually it's the previous day high or something like that. All right. Any more questions? If not, I'm going to start bricks. Bricks are my version of a point break methodology. Bricks are my interpretation of point break trading methodology. And if you've got eSignal, it's in their default. It's free. If you don't, no one on TradeStation sells it except us that I know of. So it's included with the squeeze. So like if you are interested in the squeeze, you get the squeeze, the TTM trend, and the bricks, all 3 in one indicator. I think, unless we broke it out. Have we broken it out yet? The squeeze, the bricks, and the trend. Are they broken out?
Yeah.
They're not broken out. So all right. So they are still together. So they're still together for, I think it's like $300 or $400, something like that, for all 3 of those indicators. So this is one thing that's included with the squeezes, which is bricks, and I use 3 indicators to kind of confirm what I'm doing throughout the day, and it's in order of importance. It's squeeze, bricks, and TTM trend. Okay. So how bricks work is there's a little bit of voodoo going on in the code, but the major premise is 3 consecutive higher closers up or 3 consecutive lower closes down. Now, a brick long. First thing you need to do is you need to look for a swing low or a pivot low, okay? Second, what you do is you count backwards to the left from the swing low or the pivot low. You count back 3 bricks. Third thing you do is you draw a horizontal line from the top of brick number 3. You go long when the brick breaks above the horizontal line. Everybody got that? Brick short, you reverse it. The only thing that's different in the rule is you draw the horizontal line from the bottom of brick number 3. It's the only thing that's reversed. I mean, it's the rules apply, just reverse them, and this is the only thing that's different. You draw the horizontal line from the bottom of brick number 3. Now, it sounds all nice. It's a little confusing, so let's look at it on a chart. These are bricks. The bricks are blue and red, or they can be yellow and white, or you can change the colors if you want. So the first thing we're going to look for here is we're going along trading day here, and we're looking for a swing low, and we've got it right here. Swing low is denoted just by here. There's a swing low. This is a swing high. If you're not sure, you just draw the lines on the bricks until you find one. So a brick short, this is a brick long. You have a swing low right here at point number 1. This is the first brick right here, these 2 stacked together. Do you guys see that? This is one of the simplest concepts you'll ever see traded, but it's amazing how awesome it is. That's brick number 1 right there. You guys see that? This is brick number 2. And this series of blocks is brick number 3. You guys see that? So there's our swing low. Then we count back 1, 2, 3 bricks. We draw a horizontal line, the top of brick 3, which is denoted by a price of 102 or 103.26. As soon as we get a blue brick to break up through that horizontal line and close above it, we go long. And in this particular trade, I was long at 103.26 on a brick long. Okay? You guys see this? And the market just moves on up. And then you can I scale out of it just like before, 10, 20, and then I'll exit on a fib cluster, tick extreme, pit noise, or a pivot. Last quarter's pretty much up to me where I'm exiting. It's got some, some experience in there, and it's also at like specific levels and stuff. Does everybody understand how you do a brick long? Brick has to close above the line. Yep. Has to break the line. The only weird thing about this is the brick will break above it, and your feel may be different. Like, I don't want... There's two ways you can play it. I do know a guy that plays it when the price action breaks above the line. He has a lot of success with it. That's fine if you want to play it that way. But I wait for the brick to break above it. No, not usually. Not usually. I use a 10 or a 12-point stops on these trades, too. You can, and I'm going to go over that in just a little bit. I'm going to show you the combination of all three of them. Like, I'm going to show you, you can get like a triple threat where you have a squeeze, a brick, and a trend all firing off longs. Have you got Trade Station, Malcolm? Or you got e-signal? Well, as you can see, like, this brick here's closed. You don't? Okay. Here's the one thing you'll notice. Like, the bricks will be... They'll close, and the price action will be different. You see here? See the price action in this right here is going lower, but this brick's up here. So it's a pattern recognition system, but it's based on price action, like 3 consecutive higher close, higher close, higher close, or lower close, lower close, lower close. So here you didn't have a lower close, lower close, lower close, 3 consecutive lows. So does that make sense, Malcolm? All right, let's go over a brick short. And here you go, Malcolm. Here's another example on this brick short. Do you see this close on these bricks? These bricks are going sideways, but price action is up here, and then it's all over the place here, and the bricks are still closing sideways. Same thing here. Bricks are going sideways, and it jumped up here. Bricks are still going sideways. All right, so for a brick short, what we do is we find a high, a pivot high, or a swing high. We count back 3 bricks. Brick number 1. This whole little cluster of bricks right here, or blocks, is brick number 1. Count back number 2. This is brick number 2. Brick number 3. The only thing we switch is we draw the horizontal line from the bottom of brick 3. We go short when the brick closes below our horizontal price line. So as soon as the brick closes below 102.52, you go short. So the break is 102.52. The actual entry on this one was 102.50 because the price closed there, okay? No, I would not put a stop 1 tick above where the brick border is established. Just because sometimes the bricks you don't know where they're going to close. They will go longer or shorter. You'll see tomorrow in the room in live. I'm confused. What is a brick? A brick, alright, hold on. Let me fill this question. Let me get Euro John here first, and then we'll go to you guys next. Alright, a brick is this right here. This is a brick right here. You see this, Euro John? This is considered a brick. Alright. It's just an indicator I'm laying over on top of price action. This is a brick right here. This is a brick. This is a brick. This is a brick. It's on page 327 of your manual. Oh, what is the formula? It's got a little bit of fuzzy logic in it, but it's like this. Here's how it's denoted. You have to have, I'm going to do it on a bar chart. Open, close, open, close, open, close, open, close. You have to have 3 consecutive higher closes or 3 consecutive lower closes. So if you had open, close, and then open, close, the bottom one would not work, okay? But the top one would. It's like 3 consecutive higher closes or 3 consecutive lower closes. Then Brick trades are on 2 minutes, yes, but you can use them on different time frames. I prefer them on a 2 minute. Okay, let's see here. Let me go back up a little bit. So that basically means you enter on the close of a bar or candlestick that breaks above or below the black bar. No. The brick, look here. This is our signal line right here. The black bar is my signal line. The red brick has to break below it. When that brick breaks below it, when that brick closes, price action could be somewhere else, but I still have to enter. I have to give this brick time to close. As soon as it closes below the black line, then I can go short. Okay? You got it, Bradley? There you go. It's a little confusing. It is a little bit. And on these, I use anywhere from 10, 12, 15-point stop. Alright. Could you use a long entry on first swing low at 102.10 at 10.24? Yes, you could. I think. Are you talking about right here? Let me double check. Are you talking about like going here? 1 at 10.24, 2, 3. Are you talking about previous chart? Hold on just a minute. Which one are you talking about? Oh, previous chart. Let me back up. Get the pencil on. Could you go long at 102.10? Nope. You talking about this one right here? One I just showed. Okay. Hold on. I'm getting confused. This one right here? This one you're talking about? Okay, alright. So what are you asking? Can I go, let me read it. Can you use a long entry on your first swing low at 102.10 at 10.24? 10.24 or 11.24? Alright, let me get a line going here so we're both. So you're saying 10.24 about right here. You talking about right here? A long. Alright, so this is brick number 1. This is brick number 2. This is brick number 3 right here. Then what you'd have to do is you'd have to draw a horizontal line here. It'd be about, your entry would be about 102.10. The approximate area between 10.04 and 10.24. You have to wait until the blue brick breaks up through the red confirmation line. I guess. You guys are confusing me a little bit. Are we squared away? Does everybody know what we're talking about now? Or have I confused you guys? Oh, okay. Yeah, you can, and I'm gonna show you some more examples of this. Let's go on to the next chart. Looks like we've covered those. All right, let's go through this. This will help you. I'm gonna show you exactly how I use this stuff. All right, now on this chart, what you can see is a double signal, a squeeze short followed by a brick short. Very powerful and very consistent. Means I'm trading a full lot. You're going along here, and you get a squeeze short here, and then you've also got a brick short here. Look what happens. You're short from about 103.78, and you just ride the move down. And it went as low as about, 103.55. So not a bad trade. But I'll scale out. Remember, I'm still scaling out. I'm going 10, 20, and then exit down here on my discretion. You guys see that? You see the double confirmation? You also have one right here too. 1, 1, 2, 3. I just didn't mark it. It'll kind of help you filter out, like on the 2 minute. Like if the 2 minutes acting screwy, then you can be like, listen, I gotta wait until I get a 2 minute brick to confirm 2 minute squeeze. Does everybody understand? If they do, I'll go to the next chart here. Alright, here's another one. Double signal, squeeze, short, followed by brick short, very powerful and consistent. Boom, boom, boom. Here's a long. I actually need to change that on 329. Alright, let's look at the 329. Change. Alright, so here we have a squeeze long, as you can see right here, denoted by this blue arrow on the bottom of the chart. Squeeze long, followed by 1, 2, 3 bricks. Here's your swing low. 1, 2, 3 bricks. You have a squeeze long here at the bottom of the chart, followed by a brick long. You're long from 102.25. It's just, I like it when they confirm each other. It's really nice. It means it's going to be a good trade. Don't pay any attention to this. The text is wrong. I need to change that. Nope. They do not have to be red, no. Justin's asking on a squeeze long, I thought the bricks had to be red. Nope. Just at the swing low, you just count back 3. I don't care if this is purple. Do you trail your stop 3 bricks back? No, I use a 10-point stop. 10 or 12 or 15-point stop. I use 10-point stops always. I'm very boring. So that would be like a gap fill trade also then. I don't understand, Bradley. What do you mean? Oh, this trade? Yeah, it was a gap fill trade too. Yeah, it was a gap down. Yeah, and it did fill the gap for the day too. Correct. Is that what you were asking? Okay, cool. All right. So everybody's got this. You got the squeeze long. And you had the brick long too, followed by double confirmation. It's a good thing. Alright. How to manage the trade. The exact same way as I manage the squeeze trade, that's the way I manage the brick trade. I'm not really going to bore you with going through that because we've already went through that. And it's just, 10 points, 20 points, break even -3, break even +3. You can go back over how I manage the squeezes. I do them the exact same way. Alright. Trade the market's trend. What is it? You want to help me pronounce this word, big man? It is a modified version of the
Heikin-Ashi.
It's just an easier way to look at candlestick charts. Alright, so what it is it means balanced or average. And I'm going to give you the Kentucky version. Here's the formula for calculating it on page 332. Now, let me give you the common sense version of it, and I'm going to scroll through here. It's the open, high, low, the close referred to, the current bar, the pre-H8. It's all just technical jargon. Here's what it does. It looks back either 3 or 6 bars, and what it does is it's kind of like a momentum oscillator, but it looks back, and as long as it's hanging in here and closing in the top 25%, like if on these past 6 bars, as long as this bar is closing in the top 25 or 50% of the range of the previous 3, it'll keep printing blue. If it's lower, it'll print a red one. Okay. So as you can see here, which one looks easier to your eye? And I love candlesticks, guys. I'm a candlestick junkie. I use them in my trading a lot, and I'll go over just a little bit on that later. But which one looks easier to your eye? And we'll just take a vote. Does screen 1 or does screen 2 look easier to your eye to actually read when you're in an uptrend or a downtrend? 2's a little easier. Yeah, that's correct. That's what it is, Malcolm. The bottom is just a bar chart, and I'm using that code, correct. So it's just an easier way because, as you can see, look at here. You had a red here, you had red here, and red here. Look at this area here in the candlesticks. Let me do it right here. If you look at this area in candlesticks, you had a lot of candlestick red in this area. But down here in this chart, it's like, no way, man, I'm not buying it. It's still an uptrend until right here. Then it broke to the downside. So it takes a lot of the confusion out, and so the impulse trades will kind of go away because you won't be going, oh, God, green, buy. Oh, God, red, short. So that's pretty. The difference between the top chart and the bottom chart, the bottom chart is easier to distinguish the trend. And this thing is called the TTM trend. Top chart is Globex. Bottom chart is a custom time session from 9:30 open with a 4:15 close. Okay? Here's a really good way to give yourself an edge on gaps. This is a 4:15 chart. This is a 9:30 to 4:15. I'm just going to go 9 to 4, okay? This one is a Globex. This one is a 24-hour. On this gap up, it's all blue until it gets right here. Well, on this right here, it's red right out of the gate. And what happened right here as we went over yesterday? What happened? What is that? Yeah, correct, Malcolm. Yeah. That's a gap. No, yeah, right here's a gap. This is a gap right here. Here's the gap. Okay. Yeah. Now, what's my favorite gap play? What's the highest percentage gap play that you can do? Fade the gap, 50% gap fill. What did this chart do? It did a 50% gap fill, and you had a little telltale sign here on the Globex 2-minute. The TTM trend was signaling red, I'm going lower. So it was a good gap fill for at least half. Okay? So you use this thing in conjunction with your raw gap data and with your techniques that we taught you yesterday on gaps. Okay? As you can see, if you plot this on a 9:30 open and a 4:15 close, you'd just been, oh man, it looks like it's going to go up. It's just all blue. But if you enter here at the open and you cut at least 3/4 of it loose at half a gap fill, then you get stopped out with a trailing stop on the rest of your trade. You got a good trade going on. Now, obviously, this is just a single. It's not even a double, a triple, or a home run. But I will guarantee you, if you hit singles a lot, it's better for your P&L than swinging for the fences. Does everybody understand the concept of this? So here was our gap right here. And obviously, halfway between the gap is about right here, about exactly where it stopped, bounced, and headed back up. We're using the 24-hour on the TTM trend. And that's just, it gives you a little bit of edge. Gives you a little bit more confidence to enter those gap trades. Alright, let's go on. Okay. Top chart is a 2-minute Globex to gain an advantage on gap trades first thing in the morning. It just goes over exactly what we said. On this one, what happened? Globex on the 24-hour is here. Here's a 9 to 4, 9:30 to 4:15 close. It opens up and it's red because you're already in the red, and it does a nice little gap fill. Here's the gap right here, and you can also notice that half the gap fill, this bad boy bounced right here, and then it consolidated and then fell and then filled the gap. Would that have been a long position? Well, half a gap fill? Not usually. I mean, I'll go for half a gap fill on a fade, but I usually will not reverse and then go long. No. You can, but I don't do it. You guys understand this chart? Alright, let's go to the next one. Alright. This is called a trips. And we just used it in high school and college when you had 3 wide receivers. It was called trips, so that's what I nicknamed it. You can call it a triple ding, a triple threat. I just call it a trips. This is when you have they don't have to happen in the exact sequence, but they can happen in any sequence that your eye can pick up, okay? So you don't have to have a squeeze, a trend, and then a brick. You can have a brick, a squeeze, and then a TTM trend. So in this trade setup, this is how I have kind of like my setup that's really easy on my eye. And the first thing that happens is you're going along here, and the market's just trucking along. It's going a little higher, and then boom, first thing you notice is you get a trend change, a TTM trend change. Okay? It changes from blue to red. That's the first thing I notice. Second thing, I've already got my swing high in place, and I'm bumping up my bar. I'm bumping up this black line on every third brick, okay? So the second thing that happens is, boom, I get a squeeze short at 102.48. Then the third thing that happens is I get a squeeze short at 102.41. So this is a triple, or a trips, or triple threat, or triple ding, whatever you want to call it. When these three things line up in conjunction like this, you get a nice little move. Even if you waited till 102.41, it went all the way down to 101.80. So it's a nice little trade, okay? And as you're doing this, it pretty much stays red in the TTM trend the whole way, and you never break out of the bricks. They always stay in a lower mode. Momentum did run out right in here, so you should have been out of 3/4 of your position about right here. Then it consolidates, and then it breaks lower. Does everybody understand? This is very, very important. You have to be able to kind of bring it all together in this chart setup here. So if you guys got questions, I'm going to take them now on this before I move to the next slide. Questions is, do you get trip signals very often? Yeah, they do happen. They don't happen as often as individual signals happen, but they do happen. You may get, 3 or 4 or 5 a week. I would not have added on the break lower. Hopefully I would have still been in 3/4 of my position micromanaging it. I enter in either a full, a half, or a quarter position on trade entry, and then I just scale out. I don't re-add to it just because it messes up the math. Alright, going on to the next one. Okay, hold on. So even though the TTM appears to be showing price levels as noted along with the margin, it really is an indicator. Yeah, it's an indicator. The TTM trend, yeah. Oh, wait. Yeah. Along with price levels, yeah. It's an overlay indicator. It's like a paint bar study. It's an actual pattern recognition system is what it's doing. And pretty much is what it's saying is, listen, if you're a strong market, you're going to keep doing consecutive close, higher consecutive close, higher consecutive close, higher consecutive close. As soon as you stop making higher consecutive closes in a row, 3 in a row, what the TTM trend is telling you is like, hey, you just lost your strength. You're dead. Did that answer your question, Scott? Alright, here's another one. Here's a trips. And here, look here what you have here. Here you have a really nice setup. It's a little bit different. You have the momentum on the squeeze. The only thing different here is the momentum when it fired. Look here. You guys have to tell me what this is. This is a modified version of a total momentum shift. Let me teach you this real quick. Here's the red dots. It signaled off a histogram right here as higher. The very next histogram is lower. It's just like a weaker version of a total momentum shift. So you had that happen first. At the same time you had that happen, you went from a blue TTM to a red TTM right here. Same time you had a brick short right here. Right here. You guys got that? I'm going to do it again. So it happened in this order. You had the modified momentum shift here because the first histogram fired off higher. The second histogram was shorter than the first. The second one was shorter than the first one. You had the TTM that went from blue to red. Then you had the brick signal short here. Any questions? It was good for like, I think, 20 points or something like that. Yep, exactly, Malcolm. I would have either done that, Malcolm, or I'd have got stopped out for 10 points, and I would have noted it, and I would have still reversed and went with it. Plus, you would have had the brick following and the TTM trend. So I like using all three of them on top of each other. That really helps. It keeps me out of trouble. It filters out a lot of the noise that you'll get with other stuff. All right, pit noise. I use pit noise a ton. Are we going to cover pit noise, John? Let's see. I've got 4 slides on pit noise. I can cover it tomorrow.
We can. Why don't we do? We can. This is a good point. This is probably a good breaking point. Then we can add the pit. The pit noise is probably toward the end because that's going to tie in a lot of the stuff that we do.
Okay. All right. So we're going to break here for lunch. We're going to take an hour for lunch. Stop the recordings. We'll leave it on here for questions, or here, let's field any questions here, and then we'll pause for lunch. Or do you want to do questions after lunch?
If there's any immediate questions, we can take them. Otherwise, we'll do questions and answers after lunch if anybody wants to do that.
If you guys got any immediate questions on the stuff that we just covered, go ahead and ask. And then if you can think of any more during lunch, when we get back, we'll answer some more of them. So we're going to pause the recording, save, and we'll see you guys in about an hour at about 1 o'clock. We'll start about 1:05 or 1:10, okay?
Great, sounds good. Thanks, Hubert, for all that info. And yeah, if you guys think of anything over lunch, I mean, we'll be able to sit here and answer questions for you as long as it takes, either after lunch or after this is over. Obviously, tomorrow after during the live trading day, and then also too, I mean, if you have any questions, later in the week, if you think of something, you guys have an open line to call us or email us or anything like that as well. Manny, that's why we want to do the live trading day tomorrow, because this is a lot of information, but we use it very simply, and that's what we're going to show you tomorrow. So that's why it's really important. We always thought that, we've seen these things before where somebody just gets up there and talks about theory, but it's, what really works is how to use this in practice. And you'll find is, like, for us, like, personally, you just kind of find the stuff that works for you. And for me, what I like to do is I like to play the gaps, the pivots, the scalper buys and sells, and the squeezes, and that's just what I focus on. Now, if I'm in a trade and I'll hear Hubert go, "Hey, we got a brick long here," that's great because that confirms the stuff that I'm doing. So you'll find that Hubert and I have slightly different trading styles, so you just kind of take what makes sense to you. But you'll find the best thing that you're going to find on this, the best indicators that we have found, the squeeze is very, very powerful. You guys are really going to like that, and we'll show you that tomorrow. Octopus brain. The thing about it is that even though all this information's out there, it's actually very simple to use once you understand it, once you see us using it live. So that's why tomorrow is so important, because with the live trading, you guys are going to have an advantage over everybody else in the trading room that hasn't been to one of these, because even though we share these charts, most of the people in the room are going to have really no idea how to use them. You guys are going to know how they all tie in together. With the radar screens, why we pick one play over another, and all that, and it'll sink in there on Monday. Actually, no, you'll see. I mean, basically for tomorrow, what we're going to be doing is, we're going to be starting off the day looking at the gaps, then we're going to start watching the radar screen, and then we're going to start taking either pivot plays or squeeze plays. Yeah, Manny, that's a good question. Just so you guys know, here's what we're going to do for tomorrow, okay, in the trading room. Basically, tomorrow is your day in the live trading room. So even though there's going to be other people in the room tomorrow, because I think it's going to be a benefit, because you guys can just kind of see how people react and stuff like that, pretty much we're going to be ignoring them for questions. And we're going to be telling them in the room that, just to kind of be quiet. So you guys feel free to answer all the questions that you want tomorrow. All of our trading and all of our commentary is going to be directed towards you guys, because everybody else is frankly going to be confused because they're not going to know what we're talking about. But I think the fun part is, and the reason we decided to do this is back in the full trading room instead of a separate one, is one of the things you'll find is that you can see the comment. People in the room tend to post their feelings and post their trades, and you can actually use that to help your trading. If you've got people in there that are really bullish or really bearish, it's a good contrary sign. And that's one of the reasons we like the room, is we get all these new people and new free trials in there. They're great contrary indicators. If they're really bullish, that'll help us decide, okay, it looks like this is going to be a bearish market today, and you can actually fade them. So it's kind of fun. It's a good, it ties into the whole trading and everything like that. But you guys can think about that tomorrow, because obviously we're going to know who you guys are. And so, feel free to ask questions. And myself and Hubert and John Emery, we're going to be telling everybody else tomorrow, just not to ask questions. And if they do, we're pretty much just going to have to wait until, the next day or during the doldrums, because it's your day in the trading room. All right. So we're just go grab some lunch. Again, for the rest of the day, we're going to be talking about some other trade setups, both longer and shorter term. We're going to cover bond plays, euro plays. And then we're going to go over. We may go over the business plan today, or we'll do it tomorrow. We'll just kind of see how we are for time. Either one will be fine. Patricia, I looked at it. I know FedEx did have some problems because of the storm down there in Florida. They couldn't fly down there. So we do have the tracking number, and the status of it was just kind of pending. Obviously, I'm sure that whole hurricane thing didn't help. Manny, that's a good idea. All right, let's head off to lunch, and we'll see you guys at 1. And then also, if you guys think of any questions over lunch, we'll spend as much time as you need answering questions. Also, obviously, at the end of today, we're in no hurry to leave today. Today is kind of like the last day we'll all be in the room together here, so feel free to pick our brains as long as you want. But then also on Monday, even though there's going to be other people in the room, like about another 200 people in the room, feel free. You guys have open forum with us, so we're just going to be there for you guys, and all of our commentary is going to be directed at you guys. And frankly, almost everybody else in the room is not going to know what we're talking about, because normally in the trading room, all we do is just call out our plays. It's like, okay, here's a 2-minute squeeze setting up, we're taking it. Whereas tomorrow we're going to be going, okay, look, can you guys see the trend? What's it doing here? Why are we going to be focusing on the long side, or why are we going to be focusing on the short side? And so we'll sit there and we'll quiz you guys and grill you guys so you guys can kind of beat it into your heads how that works and how we look at it. Yeah, Patricia, I'll do that. We're going to do that later today. The ones that we do. You'll see that basically everything that we set up and everything like that. But basically, I start off the day looking for gaps. Once the gap either fills or once we get the first half hour under our belt, I start looking at the radar screen. And then from the radar screen, I start setting up pivot plays, scalper buys and sells, and squeezes. And that's basically all I do in the stock market. And I didn't really talk much about the squeezes because that's something that Hubert basically developed. But I use it extensively. I really like it, and it's a great indicator. All right. We'll see you guys at 1 o'clock. Have a good lunch.